Hi, this is Zach with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 23rd of March, and actually starting today with the FTSE 100, which I feel I should be looking at more often. Here we had the rebound, which was off the back of the bullish divergence with a lower March as a low for the UK index versus back in February. That bullish divergence signal really done the trick in terms of getting us back to where we were on the day of the Ukraine invasion. Current view is that at least while we're above the 50-day moving average, around 74.30, we can actually see this market head up to 7,800 at that one-year resistance line projection. And I suppose the message there is that maybe inflation and also war and the general geopolitical uncertainty is not necessarily bad for the stock market. We have the 200-day line continuing to rise, and the normal rule is you buy a rising 200-day line, as that is illustrated by the dip in September and also in November with the Omicron dip that we had then. And as I said, 7,800 looks to be on the cards. We're not too overbought yet. The RSI in the upper 50s is actually one of the best areas for the RSI to be, and that could provide further momentum. Maybe the only thing to wait for really is to see whether we can have an end-of-day close above the initial March resistance around 75.05. So that's probably the level to look at if you are cautious about leading UK stocks. On to the normal fare for the Bulletin Board Heroes, starting off with Alchemy Capital, where I understand there's somebody big involved. I think it's the Pansana man involved in this. We had bullish divergence there with the lower March support after a gap down, and that's done the trick in terms of getting the shares above the 50-day moving average at 94 and the resistance line there from November at 96. Above that, we're looking for the top of a triangle from back in November as high as £1.55. The only thing that spoils the party here is that I think the spread is wider than the Atlantic on this stock, but hopefully the upside here might make up for that if you can get some stock. Situation which is perhaps also noteworthy at the moment, and I think this the same person at Alchemy was involved in Berkeley Energy, but I'm sure people can write in on a postcard and tell me whether that's correct or not. Here we've got Berkeley hitting the old target there around 24.5, which was from that August resistance line projection. The view now is that while we're above that line at 24.5, we could head up to as high as 43 or 42 pence, maybe by the end of next month. Update today from Mineral Sands Group Capital Metals, and here we've got a situation where shares have made a tentative rebound from the earlier lows of this month, around 6.75. Still need to break, I suppose, the 50-day moving average at 8 pence. If we can do that, then it may be up towards the 200-day line post-December resistance at 10 pence. All the while, we've got a bullish divergence line there, so the lower prices but higher RSI lows there, and that may provide the momentum for a move towards 10 pence while we hold current lows in the stock. Stock which is also maybe worth following at the moment after getting a bit of I suppose Russian issues affecting it, or at least the Ukraine-Russian situation. But it looks like E-Star's finally starting to bounce back. We've got to bounce off this falling RSI support line for the Kazakhstan-focused company, and the suggestion here is that we'd head back towards at least the 50-day moving average, but 50 and the 200-day moving average is around 4.75 over the next few weeks, while we hold the existing lows around 3.5 pence. So maybe keep an eye on that. One of the winners of the day so far has been 4D Pharma. Not surprisingly, given the announcement they had. Very interesting that we had the break of that resistance line there from November around 29 pence. A nice bull flag and mid-move consolidation above a rising 50-day line. And then we've already hit the target that was suggested by that resistance line previously drawn from December, so at around the 67 pence level. In fact, we exceeded it a bit. But while above the 200-day moving average at 65 pence, we can have another leg up towards retesting November resistance at 80 pence plus over the next few weeks. In fact, as long as we remain above the top of the gap, 54, the bull argument and further recovery could be on the card, something which was flagged by that bullish divergence line going into the beginning of this month. Slow progress, but steady progress in terms of Eurasia trying to get back some of its Russian-inspired losses. Here we've got an uptrend line in the RSI window, which the shares have sort of bounced off again for the second time now, which is a good sign. It does suggest that there'll be further attempts at trying to fill that gap up to 15 and 3/4, that kind of area, over the next few weeks. Maybe the best case scenario at this stage would be to hit the 50-day moving average, currently at 17. Upside valid while we hold above the 8 pence level. That's really the level, 7.5 to 8 pence, the old gap on the chart from a couple of years back. And while we're above that, we're in an improving tone for the stock. On to a stock which is starting to break out at the moment, Imperial, which I've sort of meaning to cover for quite a while. May have covered it before, but this is where the action is now, and we've got a line of resistance from early last year heading towards 12 pence as the initial target on an end-of-day close above 9.5, which was the initial March peak. After that, we can maybe dream of rather more gains, and probably looking towards a resistance line, which I'm just about to draw now, if I can get it on the right scale, which is heading for perhaps rather greater than 12 pence. Maybe looking towards a target which would be something like this, up towards the 16, 17 pence area over the next 1 to 2 months. So maybe by the end of April even, we could head up to 17. But initial target there, 12, while we're above 9.5. Stock which I haven't covered for quite a while is Futura, and here the reason for including it is, well, a couple of reasons for including it. One is that we've had a bear trap from below the February support at 25.5. Second is that we've had a gap to the upside. Probably want to see an end-of-day close through the 50-day moving average at 29 to give us a potential 35 pence target over the next few weeks at the 200-day moving average. The icing on the cake in terms of potential recovery here being an uptrend line in the RSI window, so bullish divergence, and that does explain the gap higher today. And really, while we're above 24 pence, hoping for 35 on Futura at the moment. Stock which I rarely cover, but here it is today, and you can see why. We've had a gap to the upside. In fact, it's an island reversal from back in February. Rising 50-day moving average as well, rising trend channel from November. That does suggest that while we hold above the gap floor around 1.6 pence, we could head up to 2.6 at the top of the November trend channel over the next 4 to 6 weeks. Just a couple of stocks to go. Well, actually, no, 2 or 3 stocks to go, let's be fair. First one is Optibiotix, which I haven't covered for a long time. Here we had a key reversal to the upside last week, unfilled gap to the upside through the 50-day moving average, and the view at the moment is that we're in a mid-move consolidation above the 37, 38 pence level, looking for the top of that triangle from November as high as 52 pence. As soon as the end of next month. We've also had a bullish divergence line, or at least with the an uptrend line there, with the lower low for March, but a higher RSI trace, and that has provided decent momentum over the near term. Stock which is also looking a little bit better now is Shield Therapeutics. Here we've got an uptrend line in the RSI window. Probably just need to clear the 20 pence level to give us the prospect or the possibility of a move up to towards the 50-day moving average at 28 pence, and that's also after a bear trap from below February support at 18. So above 18, looking for 28 as a best case scenario target on Shield. Finishing off with another one of those rather illiquid situations, but looking pretty exciting in the sense that we've had 2 unfilled gaps to the upside. One was turn of the month, and then just at the end of the first week. So 2 gaps to the upside suggest considerable strength, probably more than 40 pence, which is that December resistance line projection. But at the moment, that's probably what we're looking for the shares of Southern Energy. That's it from me today. More updates tomorrow.